Yeah. Thank you everyone for joining in for this session. So we today have Nilesh Shah from Kotak Mahindra AMC to talk through the budget. Uh, we all know Nilesh very well. He's been one of the most popular uh, market participant for over 2 decades now, and we had the budget speech last yesterday at 11 a.m. One of the shortest speech. The markets have given equity markets have given a big thumbs up. They are up to almost 1,000 points. And but however, some bit of concerns bond markets have shown. So let's hear it from the Nilesh. Over to you, Nilesh. Thank you.
Thank you, Manish. Very good afternoon to everyone. It's my pleasure to share my thoughts on the budget. As Manish mentioned, this was the shortest budget speech of the finance minister, and it laid the largest roadmap for India in 2047. Today, it is a pandemic impacted era. So let me try to summarize budget in the language which all of us will understand. The finance minister responded with dolo for infrastructure development. She provided booster for housing, sanitizer for MSME and rural India, and kept social distancing from raising taxes. The budget cleared the RT-PCR test, where PCR stands for PM Gati Shakti, CapEx, and reform. Let me take you through some of the points on the budget. This budget has been welcomed by equity market, as can be seen in yesterday and today's market movement. And at the same time, debt markets are fearful of this budget, as can be seen in rising interest rates. How did the budget kind of, give a positive surprise to the debt equity market and a negative shock to the debt market? Well, this budget is starting on a revenue estimate, which are very, very conservative. Between either the budget estimate or revised estimate of FY22 and budget estimate of FY23, there is a serious difference in revenue estimation. For example, divestment was 1,75,000 crore in budget estimate 22. It was revised downwards to 78,000 crore. And next year, it is assumed to be 65,000 crore. Now, There are estimates that BPCL may go at 60,000 crore to 90,000 crore. LIC may go at 1 lakh crore. IDBI, Shipping Corporation, Container Corporation could be a reasonably higher number. So we are looking at a divestment number of anywhere upwards of 2 lakh crore, 2,50,000 crore. But the total estimate between 2 years, that is 78 plus 65, is roughly about 1,40,000 crore. Small savings collection has been estimated to drop by 1,66,000 crore between 22 and 23. Will people stop saving? That's a question one has to answer. The cash drawdown, which this budget did last year as well as this year, could have easily given government anywhere between 50,000 crore to 1,50,000 crore. They are not utilizing that option. The tax collection for 9 months have grown at 44%. They are touched almost 15 trillion rupee. Now government is estimating that in next 3 months, Jan, Feb and March, it will move from 15 trillion to 17.65 trillion. Now this looks a fairly lowball number. And on that, they are assuming just about 9.6% growth in FY23. We believe tax revenue can potentially surpass budgeted estimate by anywhere between 3 lakh to 4 lakh crore. If we add all these numbers, then it is potential that the revenue estimate in this budget are conservative to the extent of 4 to 5 lakh crore. Now, equity market is assuming that this is a conservative budget. Government will have 4 to 5 lakh crore to spend extra. The deficit number will be lower. They will spend this money on infrastructure development, and that will create better growth. And that is why they are welcoming this budget. On the other hand, the debt market are today ignoring this revenue estimation. They believe that government will end up spending this money, and hence the net borrowing program at about 11 lakh crore will be too large to absorb. Now, which way government plays this game will determine whether equity markets are right or debt markets are right. The second thing in this budget is about roadmap to positioning India in centenary year 2047. And here government has taken a call that instead of giving fish to a person, which helps him for just one day, it is time that we teach fishing to a person so that he can survive on his own for lifetime. In FY21, we increased our subsidies from 2,50,000 crore to 7 lakh crore. That increase was necessary as pandemic came and hit bottom of the pyramid. 80 crore Indians were provided free food grains for a pandemic period, and it is continuing even today. Now, we can't continue to provide free food grains forever. It is time that we create jobs, we create employment so that these people can be absorbed. In this budget, government is focused on agriculture, manufacturing, digital India, futuristic India, or services to create a better growth. The focus is that government will build infrastructure, road, railway, all kinds of things. And on that, the farmer, the entrepreneur, the startup founder will create his business or her business and will create growth and jobs and employment. It is an investment-led budget. If we look at investments, it is up about 35% over budgeted estimate as spoken by Honorable Finance Minister. In real sense, it is up about 10% on a like-to-like basis. Now, 7,50,000 crore is a big number. And you have seen in economic survey how over last 7, 8 years, we have increased highways, we have increased railway network, we have increased electricity consumption, we have increased airport. Today, the government in agriculture sector, despite withdrawal of farm laws, is focused on organic farming, chemical free farming. It's focused on increasing oil seeds production in India so that our import of oil, vegetable oil, can come down. It's focused on repositioning millets as a health food. It's focused on river linking so that more areas can come under irrigation and flood problem can be resolved. These are longer term things, but we are moving in right direction on agriculture despite setback on farm law repeal. On manufacturing, let me tell about mobile handset sector. In 2015, we were importing close to $8 billion of mobile phones. There were 2 or 3 factories making mobile phones in India. We were 12th largest manufacturer of mobile handset in world, despite being second largest consumer. Our total mobile production value, mobile handset production value was 19,000 crore in FY15. It was a drop from previous year's 28,000 crore because of certain issues. Now, government recognized that this can't be sustained forever. If me and Manish will go and buy mobile phones in 2014-15, we'll end up creating jobs in China and Vietnam and South Korea, not in India. Our electronic imports would have crossed oil imports if we had gone on consumption spree like that. The government first started 100% FDI, single window clearance, automatic approvals. They laid a red carpet. They aggressively pursued companies like Samsung, Apple, and their suppliers like Wistron, Pegatron, Foxconn. They created electronic clusters so that these companies can come and plug and play. They don't have to worry about land acquisition and infrastructure. They created phased manufacturing program to encourage component makers. They gave production linked incentive scheme incentives so that these companies will come and set up their shop in India. They also provided import duty protection so that manufacturers are encouraged to set up their shops in India. What have we achieved with this? Today, our mobile handset production is up 8 times from FY14 to 2,20,000 crore and 12 times from FY15. From 3 or 4 factories, we are at 270 factories. From being net importer of mobile phones, this year our exports will be about $5 billion. It is much lower than Vietnam at $60 billion and China at $200 billion. But from -8, we have come to 5, and now we can aim for 60 and eventually to 200. The world's single largest location mobile handset factory is operated by Samsung in Noida at Uttar Pradesh, making about 6 crore handsets today. It's likely to expand to 12 crore. India has already moved from 12th largest to second largest mobile handset manufacturer, overtaking Vietnam and behind China. Now, when Vietnam is exporting $60 billion of mobile handsets, it's catering to the global demand. We are right now inward looking, catering to the local demand. But on the local demands base, now component makers are coming. Glass panel manufacturer, plastic and rubber component maker, PCB board maker, motor maker. All these things will ensure that our value add in mobile handsets goes from 15 and 20% in 2014-15 to about 30-40% in 2023-24 or 25. This is the journey whereby India can develop manufacturing. This budget is encouraging manufacturing in India. It is focused not only on old economy like automobile, auto component, electricals, electronics. It's also focused on future like technical fibers and solar panels and so on and so forth. The second reason why our manufacturing has not been as good as, let's say, China or South Korea or US is because we were never involving our local manufacturers, private manufacturers in defense sector development. Our DRDOs will work independently, but they will not allow local private manufacturers to be participating with them. Now government is opening up that sector. It is mandating that when India spends 100 rupee on defense capital outlay, 68% of that will be spent for local manufacturers. Now, this will ensure that Indian manufacturers, private Indian manufacturers, benefit from the military technology. Today, all of us are users of internet. That's thanks to the military technology. So many of the manufacturing items which we are using today is thanks to the development in military labs, which American private companies were able to copy, but Indian companies were not allowed till today. This budget has also focused on reducing logistics costs through PM Gati Shakti Yojana. World over, cargo moves on waterways because that's the cheapest, then on railway, and then on road. The ratio is roughly 70-20-10. In India's case, we are ulta. We spend 70% on road and 30% on railway and waterways. Now, Gati Shakti is the yojana to ensure that we can shift as much cargo on railway and waterways from road as possible. This will reduce our logistics costs. This will make our manufacturing competitive with the outside world. So overall, government is trying to encourage manufacturing in this budget as well as outside of the budget. And finally, government is also focused on services. Clearly, launch of central bank digital currency is trying to put a leg in the development of CBDC and crypto market. We are also launching digital banking in 75 districts to ensure that financial inclusion can carry forward. We are putting 1.5 lakh post offices on core banking solution so that financial inclusion can go to the next level in rural India. We have categorized data center as part of the infrastructure. There are n number of steps taken to encourage startups. And today you'll be surprised to know that the listed Indian companies' investment in fixed assets is roughly about $75 billion. And the startups and PE's investment is also almost $75 billion. So what are Tata, Birla, Ambani, Adani makes investments, including listed government companies? That's the kind of investments which is made by PEs and VCs. And hence it is need, and there is a need to encourage this. So overall, this budget is taking a bet that it is better to teach fishing to people rather than give fish. It's transiting from consumption-led to investment-led. It's been very conservative on revenue estimate. It is pretty bold on spending money on infrastructure. But a lot will depend upon how government deals with the execution. There is some excess revenue possible. Will that be used to reduce borrowing? If yes, then debt market will cool off. If it will be used for investments in infrastructures, equity market will get more encouraged. But if it is used for spending, paying subsidy, paying salaries, paying other revenue expenditure, then certainly both debt and equity market will get disappointed. Now, converting this budget into the overall market, as I mentioned, debt market is worried about the size of the borrowing program. 10-year yield has already started moving towards 7%. We believe at that level, RBI will intervene. We should look forward to credit policy, which is there on 9th of February. Hopefully, RBI will draw some Lakshman Rekha on yields and do some intervention. The level at which RBI will intervene will become extremely important. Our recommendation to investors is that at this point of time, try to invest in fixed income in short to medium duration products like short-term bond fund, corporate bond fund, PSU debt fund, or dynamic bond fund. These are the funds where even if interest rate rises, the hit will be much lower as they have discounted many of the rate hikes. Over a next 1 year view, over next 1 year, fixed income markets will be volatile with interest rates going up and down. There will be tug of war between market and RBI, and a lot will depend upon how government carries out net borrowing program. It's better to be invested into dynamic bond fund or at the short to medium term. In terms of equity, we believe right now there is a kabaddi match going between global investors and local investors. Global investors are on a selling spree. They have sold close to 1,27,000 crore from October 21 till today in secondary market. But unlike March 20, where they were selling without price limit, this time they are selling with price limit. And hence our markets haven't corrected as much. Yesterday, surprisingly, FPI selling number was a very, very low number. If that continues, then there is upside to the market. If they continue to sell, then markets are likely to remain range bound. Our recommendation to investors is that this is fair value market. We are trading roughly at 20 times FY23 earning. It is little higher than the fair value, but I'm just rounding off as a fair value market. Every correction will be a great opportunity to become overweight on equity. Otherwise, maintain equal weight to equity. Correction should be an opportunity to increase weight, but otherwise, at this point of time, equal weight to equity is fine. In terms of large, mid, and small, we don't have a very strong opinion. We right now recommend marginal overweight to large cap, marginal underweight to mid cap, and equal weight to small cap. So no strong opinion. From a sectoral point of view, we think pharma, capital goods and engineering, and banking and financial services should outperform the market in the days to come. In IT, we believe large cap IT will do well, whereas mid cap IT may see a price or a time or both price and time correction in next 1 year and will underperform large cap IT stocks. If you are underinvested in equity, we'll recommend to invest over systematic transfer plan between 6 to 9 months in 12 to 18 installments. That way, you will be able to average yourself into the market. If you are equal weight, just continue your SIPs. And if you are overweight, please book profit. This is not the market where you want to be overweight equity compared to your investment objective. One final point which I want to make before I open for questions. Please remember that there is no free lunch in the market. Today, our SIP returns are between 15 to 25% in equity funds. We can proudly say that this has met investors' expectations and created a lot of wealth. But please look at our numbers in March 20. For 3 years, my equity funds were giving negative return. For 5 years, we were giving low single-digit return. For 10 years, we had given high single-digit return, but down 50% from top. That was the true Agni Pariksha for investors, where they had to stick with us, they had to remain invested with us, despite seeing this kind of performance. Anyone would have got worried with that kind of performance. But thanks to people like Manish and HSBC, we were able to reach out to customers, investors, and request them to hold. There were some smart people who were willing to top up, and they increased their allocation to SIP or lump sum. And that's where people who remain invested or topped up are able to enjoy today's very good returns on equity mutual fund. Markets will be volatile in the days to come. They'll go up and down for global factors as well as local factors. And which is why a disciplined investing with the help of people like Manish and HSBC will be the right strategy going forward. Happy to take questions.
Thank you, Nilesh, for such wonderful insights on budget. We would request everyone to put their questions in the chat box. We will be able to take that. Before the first set of questions come in, I would like to ask a couple of questions. One, there was just too much talk about digital currencies yesterday, cryptos. They had introduced a 30% tax. So, what's our views? What is the finance ministry looking at as what is their plan to look at this cryptocurrencies, which is mined by RBI, and what is their views you think on the cryptocurrencies, which already a lot of money has already flown in?
So, Manish, RBI is not mining cryptocurrency. RBI is creating digital rupee. And RBI's central bank digital currency can be looked at as a wallet rather than a currency. Today, when you carry a credit card, invariably it is a digital currency because you are able to spend money. A debit card also is a digital currency. Same way, RBI will create digital rupee, which instead of lying physically in your pocket, will reside in your mobile phone. So it's not mining, it is digital rupee. Think it as a wallet. Now,
Okay.
cryptocurrencies is a wrong word.
Mhm.
As Honorable Finance Minister mentioned yesterday, a currency is a currency which is backed by the central bank and the government. Crypto is a virtual asset, a digital asset. There's no currency there. It is being used for exchange by like minded people. Tomorrow, if that tribe gets reduced, there will be no exchange and there will be no currency. So think crypto as virtual asset, digital asset. Think CBDC as a wallet. RBI is going into wallet because it can reduce friction cost. Now, our payment systems are fairly efficient. Today, when you use UPI, when you use BHIM, when you use debit card, there is much less friction cost. If you use Google Pay, Bharat Pay, Phone Pay, Paytm, again, there is much less friction cost. So CBDC is a competition equivalent to all these payment options. Whereas crypto taxing at 30% is essentially recognizing that there are many people who have invested in cryptos. They are doing buying and selling. And today they don't know what tax rate they have to pay. Most of us who were trading in cryptos, investing in cryptos, would have paid at applicable maximum applicable tax rate. Someone will pay at 5%, someone will pay at 43%. But through this, it is being taxed at 30%. So in one line, crypto is a digital asset. It is not regulated by any regulator today in India, but it is not illegal as you are allowed to trade or invest in cryptos under your liberated remittance scheme. And you will be taxed at 30% on any profit you make on crypto. If you make loss, it will not be allowed to be set off against any other income.
Yeah, absolutely. Thank you. So next question, Nilesh, would be there was a lot of thrust which was put in on roads, railways, communication, defense as sectors, and other sectors. There were a lot of talk about public-private partnership and transparently policy regime. So, what's your views on specifically on the sectors which government talked about public-private partnership rather than their own investments in?
So the fact remains that government is not the best runner of the business. Air India, when it was with Tata's, was a small airline, but it was respected airline. People used to travel by Air India. Now, if Air India would have remained with Tata's, maybe it would have become Emirates, Etihad, or Singapore Airlines and developed India's tourism sector. Unfortunately, it got nationalized and moved to the government. It ended up loss-making airline. It ended up having more employees per plane than passenger per plane. Uh, it drained out anywhere between 1 lakh to 1,50,000 crore from government budget. And every year it was incurring 5 to 10,000 crore of loss. Now we have given it back to the Tatas. It's not necessarily a public-private partnership because we have sold completely. But something like Hindustan Zinc is a public-private partnership. In 2003, Hindustan Zinc was making 100,000 tons of zinc and was a loss-making company. Uh, the government sold majority stake to Vedanta Group, retained minority stake. Today, and they sold it for roughly about 500 or 700 crores. Today, on the minority stake, government is getting more dividend than 500 or 700 crore. The zinc production is up at 1.8 million ton. The contribution of Hindustan Zinc to government through royalties, cess, taxes, and dividend is upwards of 10,000 crore. So from loss to profit, from getting more by way of dividend income every year than what you got by selling the company, that's the benefit of public-private partnership. Axis Bank, in some sense, was a public-private partnership promoted by UTI, now owned by LIC, but there is private participation. Maruti Suzuki was public-private partnership where government and Suzuki came together, and eventually government, Suzuki, and public came together. So we have realized that public-private partnership is the way forward. The government can provide capital, government can take the risk, but it is better to leave it to professional managers to create growth. And this budget is encouraging that. Obviously, it's not an easy task. Last year, we aimed for divesting IDBI Bank, Shipping Corporation, Container Corporation, BPCL. So far, we have not been successful. We have been successful only in selling Air India and Nilanchal. So there are lots of vested interests which is trying to derail public-private partnerships. But I think that's the best way forward. And if we don't do it, it will be negative for our economy.
Yeah. So, but sticking to that point on public-private partnership and disinvestment, the disinvestment target has been reduced substantially from close to 1,75,000 crores to about 65,000 crores. Whereas, so do you think that since the LIC IPO is expected in this current financial year itself, government is not very confident that they will be able to make a huge amount of disinvestment in next financial year? Is that the reason for such a large cut in that disinvestment target?
So I think it is conservatism.
Okay.
In most of the years, we don't achieve our divestment target. So government is saying that let's under promise and over deliver. The total estimate between 2 years, FY22 revised and FY23 budgeted, is 78,000 crore and 65,000 crore, which is 1,43,000 crore. Now, LIC is estimated to go at 1 lakh crore. Shipping BPCL could be another 60,000 crore. IDBI Bank, Shipping Corporation, and Container Corporation put together could be another 50,000 crore. There is also Nilanchal Ispat and other smaller numbers. So we can easily be looking at, instead of 1,43,000, upwards of 2 lakh crore. So government is saying that let's underestimate divestment receipts. And if we get, that is good for us.
Yeah, sure. So, Nilesh, coming on to the digital push which has been envisaged, there is always a question which comes to everyone's mind that how does it impact the rural India? Rural India has severe shortage of bandwidth at this point as well. So, do you think budget has something to build that piece up substantially over next 5 years?
So you have to visit rural India today to see how digital India is transforming their life. I visited Kutch, where my brother-in-law was staying some time back, and we could see farmer who was downloading on his mobile weather forecast. He was listening to YouTube channel for picking up what is the best, crop to grow. He was also tracking price movement. Now, all these things was impossible without this digital revolution. If you look at rural India today, the biggest challenge is education. If you look at many of our students, even in higher standards, they are not able to add 1 plus 1 and so on and so forth. Now, how do we improve the quality of education? Well, you have to have good teachers, and you can't create overnight good teachers.
Yeah.
But with digital India, with online education, we can definitely provide good quality teaching. an IIT professor teaching in Mumbai can be relayed in Kutch, in Shahjahanpur, and the students can benefit from IIT teacher. The same thing is on telemedicine. I mean, clearly we have to improve consultation, but quality of doctors differ. How do we ensure that the best quality doctor of Mumbai or even New York is available for a villager? Online telemedicine is the thing. Now, you can always show a picture of a boy standing on a tree in search of a network, or you can show a picture of so many kids which have got access to quality education and quality medical consultation. It's a journey. We can show glass half full or we can show glass half empty. But what other solution we have? So in this budget, again, we are spending money for BharatNet, which is connecting villages with optical fiber. This will provide bandwidth, which we are getting in our home, to our home in villages. On that bandwidth, you will be able to provide online education, online telemedicine, online shopping, online e-commerce, and so many other things. There is one more thing which is coming in, and I hope I'm pronouncing it correctly. If I pronounce it wrongly, please forgive me. I think it is called Open Network Digital Commerce. As I mentioned, if I'm wrong, please forgive me because I am also trying to remember. Now, what is this ONDC going to do? Manish bhai, any seller in any part of India could put his selling opportunity there. And any buyer, whether he's Amazon buyer, Flipkart buyer, Snapdeal buyer, will be able to buy from them. So effectively, it is ensuring that the seller does not have to become party to Flipkart, Snapdeal, or Amazon, and the buyer does not have to become party to Amazon, Flipkart, or Snapdeal. It is essentially like email. You could be on Microsoft, I could be on Gmail, yet we are able to talk to each other. Same way, trading will happen. Now, imagine the gap, imagine the value. Like I am a Gujju bhai, so I am a foodie. I wanted to eat adadhyo. It's not available online. Now, with ONDC, I'll be able to buy adadhya even from a place like Bhavnagar or Rajkot. The Bhavnagar guy who's making adadhya will be able to supply customers in today Mumbai and tomorrow in New York also. Yeah. So Digital India is a game changer. We can always show that network hasn't reached many places, or we can show that network has actually reached many places.
Yeah, absolutely. Okay, so one big question which a lot of people like middle class people like us is asking, that there is no change in income tax slabs. There was no increase in standard deductions. There was no, so a lot of people were expecting could be for housing sector, the tax breaks can be increased for buying new houses, but none of them came through. So what's your views? Why they different from putting out such a tax break for middle class?
So Manish bhai, I am in 43% tax bracket.
Yeah.
I feel the pain.
Yes.
And my pain is not that I'm paying 43%. My pain is that there are so many acquaintances I know in business. They have bigger house than me. They have bigger cars than me. Yeah. They buy cars more frequently than I buy. And yet I pay far more tax in 1 year than they pay in lifetime.
Yes.
When I go to my CA's office, their staff actually clap because my tax payment is equivalent to their other clients' tax payment. So I am equally offended, not because I have to pay 43% tax. I think my tax payment is going towards good things. We are seeing highways being built, power plants being built, ports getting built. That's a fantastic thing. I also don't mind that some of my money is going towards providing food subsidies and fertilizer subsidies to the poor. That's given. If I'm earning well, I need to contribute to the society. Where my problem comes is that please also ensure that this tax burden is equally distributed. There are sets of people, especially in business, which are not paying fair share of tax. And there are honest taxpayers which are being burdened both in salary as well as in business because they are paying fair share of tax. I think we have to improve our tax compliance. And for that, you require fear of law. Unless until there is fear of law, tax compliance cannot improve. And to me, rate cuts on individual taxation is possible only if we are able to widen the tax base. There was a statistic some time back that number of people who are buying a luxury motor car were far more than number of people who were paying income taxes of equivalent amount. Now I'm yet to meet a salaried person whose tax liability is 15 lakh and he has bought a 15 lakh rupee car. But there are so many people in other segments where they are buying a 15 lakh rupee car and their income tax payment is less than 15 lakh.
Yeah, absolutely. So, related question on that. So, the long-term capital gain surcharge has been capped at 15% in this budget. So, how will that benefit some of the investor community?
I mean, it's a marginal tax relief to people. It will encourage people to invest for longer term capital gain. Uh, it's a welcome step, but I think we need to encourage compulsory savings. Today, Section 80C limit, I think, is 1,50,000 rupee.
Yep.
It includes everything, Provident Fund and PPF and NSC and housing loan repayment and so on and so forth. Unless until we encourage savings, it's not really going to help economy. Uh, Equity linked savings scheme is 1,50,000 rupee. Now, this is not sufficient. We need to encourage savings directly or indirectly. Now, in this budget, government brought state governments at par with central government in terms of NPS contribution. What about private sector employees? Why are you differentiating between private sector versus government employees? Why not give the same benefit to private sector employee who is also citizen of this country, just like a state or central government employee? So we need to ensure that there is equitable distribution of tax burden. Today, what we are seeing is that the most vocal guy gets the maximum benefit. The more unionized guy gets the maximum benefit. Now, one can argue that that's real life. The crying baby gets the milk and mother's attention or father's attention. So we'll have to live with that.
Yeah, absolutely. So, next one on what's your views on the current inflation environment in India, and how do you think RBI is going to address it? Because they had an opportunity in the last policy, but they sounded pretty dovish because of obviously there's Omicron challenges at that point of time. So, but going forward, how do you see RBI reacting to the inflationary pressure?
So, in my opinion, inflation as measured by CPI is well within RBI's range. RBI was supposed to target inflation between 2 to 6%, and bearing 1 month, it has remained well within 6%. Going forward, also, despite higher oil prices, it is expected to remain around 5.5 to 6%. And I'm building 50 basis point increase over RBI's estimate of 5 to 5.5%. Now, some critics are arguing, look at WPI, it's already in double digit. Where were all these critics when WPI was negative last year and before that? You can't be selective in your approach. If you didn't talk about WPI being negative in those years, then please don't talk right now that WPI is higher. In fact, Manish Bhai, this is 5th month running where Indian inflation is lower than American inflation.
Yeah.
US is the highest negative real interest rates. In India, we do have negative real interest rates, but it is much lower compared to US. Now, we believe RBI has done an excellent job in managing inflation, but there will be always commentary doing nitpicking, cherry picking, that this item's inflation is 20% plus. But do we have control over that inflation? For example, if crude prices go up because Houthi rebels have fired missiles on UAE, or Russia and Ukraine are on the verge of a war, There's nothing you can do. By raising interest rates in India, you are not going to request Saudi to lower oil prices. For that, you have to develop oil price hedging mechanism. You had 500, $600 billion of reserve. What were you doing when oil prices were $30 a barrel? Could you have not shifted part of the reserve in oil? Could you have not gone into the futures market to hedge oil? Yes, all of this could have been done. But in India, it is not possible, because if RBI buys oil at 30 and it goes to $29 a barrel, there will be criticism that you lost $1 per barrel. No one will realize that over a period of time we'll pay $100 a barrel, but 30 to 29 in the short term will be treated negatively. So unless until we develop maturity as a society to have realistic expectations, RBI will not be able to do this kind of steps. Government will not be able to take this kind of steps. And despite these challenges, RBI has ensured that inflation has remained well under control. In a lighter vein, Manish Bhai, when we were kids, Roti Kapda Makan, Kali Charan, Mother India, the villain was always food black marketeer, food grain holder. Now show me one Hindi movie where the food black marketeer is the villain. We have improved to politicians and terrorists, no longer food black marketeer. It shows that inflation is not that big a concern.
Well said, Nilesh. Well said. Uh, next one is on. So you touched upon U.S. inflation and U.S. markets. So the next question would be on how do you see Fed? Fed has given a very hawkish policy. They have spoken about they start tapering as soon as March. So how do you see the impact on Indian markets and global markets of that hawkish policy?
So Fed is like a, fire department where fire is on, and they are saying that we will put the fire, we'll start watering, we'll start throwing water, but they are not throwing water right now. And you can very well imagine what will be the credibility of a fire department which is ready with pipes and fire truck, but still not throwing water. Fed clearly is behind the curve. Their inflation is about 7%. Their policy rate is 0 to 0.25%. Their inflation is above their target range of 2% for a long period of time. And all throughout, they were doing tapering. All throughout, they were buying US government bonds. And all those critics who are advising India about tight monetary policy and inflation were keeping quiet over there. Now, Fed has to gain credibility. How can they get credibility? They have to raise interest rates. But if they raise interest rates, growth can suffer. The American government provided huge fiscal stimulus. Fed matched it with huge monetary stimulus, and that's why their inflation is higher than India. Now they are in catch-22 situation. They are caught between devil and deep sea, and which is where you are seeing that various estimates are spreading about their rate hike from 3 to 6 this year. Their front loading from 25 to 50 basis point in March, from their tapering to sucking out liquidity. Now it's very difficult to predict what Fed will do because they are a cat cornered. What they will do, who knows? Let's look at from our point of view. The FPIs generally redeem from emerging markets when interest rates in US goes up, as their risk-free rate goes up, as their return expectation goes up. They have to adjust prices to reflect their higher return expectation. Now, US interest rates are moving from 1.5 on a 10-year to 1.85. The Fed rate is expected to move from 0 to 0.25 to probably 1.75 and 2. Now, whether this is front-loaded, back-loaded, whether this happens this year, next year, but this is the direction. And under that direction, FPIs will be tempted to redeem. Now, where will they redeem? MSCI India index is up 100% in US dollar terms since March 20. Yeah. MSCI emerging market index is up only 45%. Can FPIs redeem in Turkey, Brazil, Russia, South Africa? The answer is no. Can they redeem in China? Answer is no. They can only redeem in India because this is where they have the profit. So we will see FPI selling thanks to the US Fed rate going up. But will FPI sell India forever or at any prices? Answer is no. We believe they will be a calibrated sellers at higher valuations, and they will be a buyer of Indian equities if valuations are favorable. So we will see most probably a scenario where in first half of CY22 FPIs are seller like they were in last quarter of CY21. But towards second half, they will be buyer. They will be also buyer in private equity market. They will be buyer in primary market. So net US Fed rate movements, depending upon front loading, depending upon rate of rise, will have a temporary effect via FPI selling in India, but not a permanent impact.
Absolutely. Thank you, Nilesh. So one question which is coming over there, that there's so much push on capex manufacturing in India, but the labor law relaxation bill, which was supposed to come in the parliament soon, it is still not seen light of the day. So what are your views on that? Where is government placed on labor laws when there is so much thrust on capex and manufacturing?
So it's again how, employees union created strike against privatization, against computerization, and delayed it. You remember PSU Bank's employee going on strike against computerization. They didn't realize that computerization will actually lower their work burden and increase their size and scale. Now government had to engage with them, bank management had to engage with them, convince them, and what should have happened in 6 months actually took 6 years. This is unfortunately the sad part of democracy in India. We can't impose regulations like China, like Russia. We have to build consensus and then move forward. Now, there is a set of people in government departments where there is lifetime employment and pension. That's where whenever a government department recruits, there is like a lot of people applying for it. In private sector, there's no lifetime guarantee. Manish, by you, me, if we deliver, our employers will keep it. Otherwise, they'll fire us.
Yes, absolutely.
Now, how do we match this? Labor law needs to be relaxed so that people will then recruit, people because they know that in the downturn they'll be able to fire. In China, many decades ago, when I had gone, I had seen 50,000 employees working in a garmenting factory. India's largest garment exporter, even today, might not be employing 50,000 employees. Why is that? Because you are not sure whether you'll be able to fire those employees when your business turns down.
Yes.
Now, labor law, there is absolute need for reforming them. But unfortunately, we have to build consensus and then only we can impose them. The minority vested interests are stalling majority growth.
Yeah, absolutely. So, since I'm just cognizant of time, so last question which we will take is on the auto sector. So there is too much talk about electric vehicles at this point. There is a concept of green hydrogen which is being spoken about. There is ethanol blending increase which is being talked about. So what's your views on the auto sector, and what is the technology where government will push their thrust on? And how do you see that sector shaping up in next 5 years?
So Manish bhai, I don't know if you would have experienced something like this or not, but many a times we used to go to ST bus stand in the childhood days to pick up a bus to carry us to a destination. And in those days, many a times they never used to put the board which bus will go where. So effectively, 3, 4 family members will go and put a rumal or go and sit in the bus, hoping that one of them will turn out to be the right bus, and then everyone will converge. The same thing government is doing. We really don't know what is the future of automobiles. Is it fossil fuel as engines can improve and reduce emission? Is it hybrid where you mix CNG, LPG kind of lesser polluting gas with fossil fuel and reduce emission? Is it blending where you merge ethanol and petrol diesel to create lower emission? Is it electric? Within electric, is it green hydrogen, whether or it is something else? We really don't know what will take off in the future. So right now we have to ensure that we have put our handkerchief on every place, and whenever that bus starts and it happens to be a right destination, we are able to latch on. The budget has done the same thing. It's talking about battery swapping so that electrical mobility can be supported. It's talking about creating interoperability standards so that we don't suffer from, like, our mobile phones. If you have Apple phone and I have Samsung phone, we can't use each other's charger. Now you can't create that thing on electrical mobility. Uh, Similarly, if you go to green gas, hydrogen, green hydrogen, there is push towards that, albeit more by private sector. The government has also talked about creating, uh, I'm missing the exact word, but it's encouraging farmers to give their subtle to manufacturers, who will then mix it with thermal coal to create thermal power plant. That way, burning of subtle can come down and there will be lesser coal to be used. So there are various technologies which are getting developed. And as India, we have tried to put our hands on everything, not knowing which one will take off. And that's the right approach. In the hindsight, we will figure out that, oh, we should have approached this and not that. But today, we don't have that clarity what will work.
Yeah, absolutely. Thanks, Nilesh. I then just on a related note, one of the things which is a big global theme at this point is ESG, and a lot of money is flowing into the ESG themes in India right now. The FPI money is also moving into companies which are ESG compliant. What's your views on how the India companies will shape up on the ESG front, and will higher ESG compliance attract much larger foreign flows? What will be your views on that?
So, Manish bhai, we don't have a choice but to leverage this.
Yeah.
Today, if you look at BRICS, which was considered one group, now Brazil has been pushed out, uh, Russia has been pushed out, South Africa has been pushed out, and even China is trading below Indian valuation. Why are people giving us higher valuation? Of course, our earnings growth is more sustainable and better. Russia, Brazil is more commodity. South Africa is a lot of inequality and hence worry about whether that country will explode or not. But there is also recognition of our better environmental, social, and governance record. Jack Ma was the richest, most famous Chinese. China government one day just removed him from Alibaba. In Russia, there was a gentleman called Mikhail Khodorkovsky. He was the richest Indian. He had political ambition. One day he was just put behind the bar. Now, those kind of things don't happen in India, which shows that our governance system is far better. And SEBI, Finance Ministry, has come out with many steps on governance. There was a Kumar Mangalam Birla committee, then there was Uday Kotak committee, which gave so many recommendations so that governance can improve. Today, we have seen not only local promoter company, but also multinational promoter company and government company resolutions getting defeated by minority shareholders. Maruti Suzuki wanted to set up a 100% subsidiary in India. Minority shareholders of Maruti Suzuki rejected it. There was a multinational company which wanted to levy 5% royalty. Minority shareholders rejected it. So our governance standards are infinitely superior to China, Russia, Brazil, South Africa, Turkey kind of countries, and we have to hammer that point. On social standards, we are definitely much lower, but we came out with compulsory 2% allocation to CSR, and many companies are doing great jobs. And there, the gold standard is Tata Steel, where, when we were kids, there used to be Discovery of India serial, and Tata Steel used to sponsor, saying that we also make steel because they will show football and Jamshedpur and social and tribal welfare, and finally say we also make steel. So what Tata Steel kind of company started doing long before many companies are doing, and hence our social standards will also be acceptable to the global investors. Finally, it is environment. And here, India is doing a terrific job. We are one of the few countries which have achieved Paris Accord target. This was supposed to be achieved in 2030, where 40% of our installed power capacity will be renewable powered. We achieved it in 2021. In COP26 Glasgow, our Prime Minister went and committed net carbon neutral by 2070. Russia and China boycotted that summit, even though China is world's largest polluter. Brazil and South Africa didn't commit anything. So we are making very, very positive contributions towards environmental change. In this budget, we have talked about blending of fossil fuel with ethanol. We have talked about biomass pellets for thermal power plants. We have talked about coal gasification and coal to chemical pilot projects. We are thinking of launching sovereign green bonds, which will be invested for creating green growth. We have talked about electrical mobility, including battery swapping and interoperability standards. We have talked about encouraging private forestry and agroforestry. Our green cover has actually grown up from 2014. And we are also putting 19,500 crore for creating 280 gigawatt of renewable solar energy capacity. Now, all those things we have to continuously highlight to the global investors so that they recognize that India is doing a wonderful work on the ESG, and that will sustain our premium valuation.
Thank you, Nilesh Bhai. That was a great insight, great analysis of the budget. Thank you, everyone, for joining in today. It was a wonderful session. We look forward to see you again in near future. Thanks, everyone, for joining us today.
Thank you.
Thank you.